Hey everyone, welcome to Amin Facts Pro. If you enjoy our content, make sure to like and subscribe for more amazing insights. Let's jump right in. ChatGPT's AI model processed 42 live indicators, revealing consolidation momentum as Bitcoin holds at $118,688 following a historic $123,091 all-time high achieved on July 14th. With a minimal daily movement of minus 0.06%, testing whether smart money accumulation overcomes emerging alt-season rotation. The market cap remains at $2.37 trillion, with institutional validation through Genius Group's 200 BTC acquisition, which targets a 10,000 BTC treasury. As Goldman Sachs and BNY launch tokenized money funds. The following analysis synthesizes ChatGPT's 42 real-time technical indicators, institutional treasury developments, alt-season implications, and smart money positioning to assess BTC's 90-day trajectory amid a key inflection between continued dominance and altcoin rotation acceleration. Technical consolidation. Historic high pause creates decision point. Bitcoin's current price of $118,688 reflects a minimal 0.06% daily movement, representing healthy consolidation after reaching a historic all-time high of $123,091 on July 14th. The $2,347 intraday range represents 2% of the current price, demonstrating controlled volatility typical of institutional accumulation phases. RSI at a healthy 63.83 provides optimal reading with room for continued appreciation without overbought concerns, suggesting sustainable consolidation rather than trend exhaustion. This technical reset creates a foundation for the next major move while maintaining bullish structure above all EMS. MACD indicators exhibit a concerning divergence, with the line at minus 141.12 below zero, despite a positive histogram at 2,895.80, creating mixed signals that require careful monitoring. The divergence suggests a potential momentum shift, while the histogram indicates building pressure for directional resolution. Alt-season looming. Dominance shift threatens BTC leadership. Bitcoin's market dominance at 61.64% faces pressure from emerging alt-season dynamics as institutional capital explores high-performance blockchain alternatives. The dominance level near multi-year highs creates vulnerability to rotation as altcoins demonstrate superior performance metrics. Alt-season index holding above 44 indicators potential capital flow from Bitcoin toward altcoin alternatives offering higher growth potential. This rotation pattern has historically preceded a strong decline in BTC dominance as institutions diversified beyond Bitcoin-only strategies toward broader crypto exposure. Smart money accumulation. Institutions drive treasury expansion despite alt-season uncertainty. Institutional treasury adoption accelerates, with Genius Group boosting its holdings to 200 Bitcoin while targeting an ambitious 10,000 BTC treasury accumulation. This aggressive institutional strategy demonstrates a sophisticated long-term position that transcends market rotation concerns. The launch of tokenized money funds by Goldman Sachs and BNY represents the mainstream financial infrastructure's embrace of cryptocurrency technology. Japanese AI companies are targeting 3,000 BTC treasury allocations, and UK firms raising $135 million for Bitcoin strategies demonstrate a global momentum in institutional adoption. Quantum computing threat. Long-term security concerns emerging quantum computing developments pose a potential long-term security risk, with 7 million Bitcoin potentially vulnerable within a 3-year timeline. This technological threat creates underlying uncertainty for institutional adoption strategies requiring multi-decade security assurance. While the quantum threat remains distant, institutional treasury managers must consider technological evolution in their long-term allocation decisions. Security concerns could accelerate the development of quantum-resistant alternatives, potentially impacting Bitcoin's institutional adoption. Market dynamics. Ancient wallet activity and institutional flows. The ancient Bitcoin wallet activation, after 14.5 years, involves moving 3,962 BTC worth $468 million, demonstrating long-term holder distribution patterns. These historic movements typically indicate cycle maturation rather than bearish sentiment among original adopters. The wallet's cost basis of 37 cents per Bitcoin in January 2011 versus the current $118,688 price represents an extraordinary 32 million% appreciation, validating Bitcoin's long-term store of value thesis for institutional adoption consideration. Support and resistance. EMA structure maintains bullish framework. Immediate support emerges at today's low around $117,103, reinforced by 20-day EMA support at $115,993. The exceptional EMA positioning, with the price above all major moving averages, confirms the success of institutional accumulation despite the consolidation phase. Major support extends through the 50-day EMA at $111,273 and the 100-day EMA at $105,992, providing multiple safety nets during any correction periods. This support structure appeals to institutional risk management, which requires defined downside protection. Key resistance begins at today's high around $119,450, followed by psychological resistance at $120,000 to $121,000. Breaking above this zone would indicate continuation toward major resistance at $125,000 to $130,000, representing the next institutional milestone targets. Social sentiment. Dominance spike suggests caution. Bitcoin's social dominance, reaching 43.06% during its recent all-time high achievement, represents a concerning retail FOMO indicator. Historical analysis reveals that spikes in social dominance often precede short-term corrections, particularly when retail participation peaks. Community sentiment at 80% positive, with declining engagement metrics, reflects typical consolidation phase behavior while maintaining institutional confidence in the long-term adoption thesis. Professional investors recognize social dominance peaks as opportunities for distribution. Regulatory progress. Tokenized funds validate infrastructure. Goldman Sachs and BNY tokenized money fund launches represent a regulatory milestone, validating cryptocurrency infrastructure for traditional financial services. These developments provide institutional confidence for continued Bitcoin treasury allocation. Societe Generale's entry into making markets in Bitcoin and Ethereum ETPs demonstrates the European institutional embrace of cryptocurrency trading infrastructure. This regulatory progress supports sustained institutional adoption, regardless of short-term alt-season dynamics. 90-day BTC price forecast institutional momentum continuation. Bull case, 45% probability. A successful $120,000 breakout, combined with continued treasury adoption, could drive appreciation toward $130,000 to $140,000, representing a 10 to 18% upside. This scenario requires institutional accumulation overcoming alt-season rotation pressures with sustained volume confirmation. Technical targets include $125,000, $130,000, and $140,000 based on institutional flow projections and treasury adoption momentum. The infrastructure development could attract additional conservative capital seeking digital store of value exposure. Alt-season rotation impact, base case, 40% probability. Extended consolidation between $115,000 to $125,000 could persist through Q3 2025 as capital rotates toward altcoin alternatives during institutional diversification. This scenario allows for a decline in dominance while maintaining structural support. Support at the EMA cluster around $111,000 to $116,000 would likely hold during rotation, with volume declining toward 50 to 60 billion daily. This sideways action presents an opportunity for altcoin appreciation while preserving Bitcoin's institutional foundation. Dominance breakdown, bear case, 15% probability. Breaking below the $115,000 support level could trigger a deeper correction, potentially targeting the $105,000 to $110,000 range, representing an 11 to 17% downside. This scenario would require strong institutional demand disappointment or accelerated alt-season momentum. The strong Treasury adoption backdrop limits extreme downside scenarios, with major support at $105,000 to $110,000, providing a foundation for recovery during continued institutional validation cycles. BTC forecast. Digital gold meets institutional evolution. Bitcoin's current positioning reflects the convergence of historic achievement, institutional treasury adoption, and emerging alt-season uncertainty. The 42 indicator analysis reveals that the cryptocurrency is at a key juncture between continued dominance and diversification pressure. Next price target, $125,000 to $130,000 within 90 days. The immediate trajectory requires a decisive breakout above $120,000 resistance to validate continued institutional dominance. Over alt-season rotation. From there, Treasury adoption momentum could propel Bitcoin toward the $125,000 psychological milestone, with sustained institutional flows driving it toward $130,000 to $140,000, representing new cycle highs. However, failure to break the $120,000 resistance would indicate extended consolidation in the $115,000 to $118,000 range as alt-season rotation accelerates, creating an optimal institutional accumulation opportunity before the next Treasury adoption wave drives Bitcoin toward $150,000 plus targets, validating the digital gold thesis.